Will Nifty from these levels go higher or lower?
My bias is on the higher side.
So we are likely to break the upper end of the range.
We've already broken the 17,250 mark. So the first hurdle is broken.
Ajay Srivastava may not agree with you. I want to hear his view and then I'll ask you again. Ajay Srivastava, good morning. You're running
Good
late
morning.
today, sir.
Oh, no, I was not late. I think your guys were enjoying themselves for the background.
We had some breaking news to deal with. I can always come back and defend that.
Well, no, they're enjoying a first day of green, which is there in the market. You know, it's very rare to find these days like this when you can come back peacefully on your desk and know that world is not falling apart.
And this is happening when Nasdaq literally has fallen apart. So India is outperforming. Would you agree with Kunal when he says that in the month of May, don't sell and go away, because folks who wanted to sell, they've already sold in the month of April, they will come back in the month of May.
See, you know, Nikunj, India's dilemma, investors' dilemma has never been to sell, because Indian investor never sells in the first place. I don't know, it's apart from the traders, no investor sells. I have not seen anybody who sold equity through the bloodbath. They kept their banking funds going, they kept the investment going. So Indians by nature don't sell. I think the question they keep asking is, should we buy more? So, you know, we have a very different kind of a country where we never sell equities. So the quick question to everybody always is, Kiana, should I buy more? Is the market corrected? Is it good enough time to get in? So my guess is that, you know, April to June, I think you should just spend your good money on your holidays. Take out the ticker from your phone. Is not going to be anything worthwhile. Lots of economic events are playing out. You already seen US has gone into a contraction. We don't know where our economy is going to go. So there is no compelling case to buy. Now, whether argument is whether have you sold enough or are you holding the lemons, that could be one of the key questions. But the answer is very simple: is there is no compulsion to buy till at least the June quarter, in my mind. This quarter is a washout economically, financially, market will trade up and down. That's how they do it. But as an investor, I think you're advised to spend your good money on a holiday than on stocks.
People are taking your advice. Hard to find a hotel room these days. Hard to get a simple airline ticket booked. So I think what you're telling, what you in fact advising.
Even if you get the airline ticket, it is so expensive.
Yeah, I mean, I took a ticket to Delhi to Bombay. It almost felt like I'm flying economy class but paying for business class.
Yeah, really. But I think Ajay's already got his May holiday booked. Haven't you, Ajay?
I unfortunately or fortunately, yes, I am out for next 2 months. I am kind of decided not to spend my money correctly, which is on the holidays.
So you will join us for interviews on Zoom then?
For use always, Nikunj. Who can say no to you? You can't live in this country and come back and say no to Nikunj and Economic Times, can you?
I thought that applied to Aisha actually. But we'll keep that.
Aisha included. I'm sorry. Aisha included.
It's okay. I'm not FOMOing, Ajay. You're out of my list now. I'm kidding.
Ajay, markets from November to April end, I'm looking at last 5 months. The Nifty has done precious little. 17,000, 16,500, 17,000, 16,500 and now 17,000. So while the market may have not acted or reacted to what is happening in the world, the bent of the market has changed. IT is underperforming, value stocks are making a comeback, growth stocks are underperforming. How does one deal with this churn?
I think important is that through this churn, you have to look for stories. And I think you got to stick to your story as to why you're invested. And the stories which played out and correctly played out, one was, which is semi-equity, which is the investment trust, which played out beautifully. That story has played out in India fantastically well for investors, safe, sound, and you really talking the infrastructure. The second is the commodity story. That playing out very nicely. The good dividends are coming through. You saw Vedanta's dividend yesterday. And I don't think that story is going to go away. So even though the share price, in fact, has gone up, but may not do magic, but you will see substantial dividend coming through. IT, I've always maintained that every correction is a buying opportunity. One should not shy away from IT because that's a very long-term secular story for investors in this country and very clean governance. You get the money back. Then there are a lot of restructuring stories. You saw what happened to GHCL. You saw what happened to Forbes. So I think you need to look at, pinpoint those stories which are restructuring the companies. So when a GHCL is going for a split, you saw the ramp up from almost 60% price up. You saw when Advent came into Forbes, even after the day of announcement is given 40-45% return on the stock. So you need to look at stories. The vanilla companies, I think they have a problem the consumer-facing companies have a serious problem. And, and one has waiting, and we keep talking about it, that till the underlying consumption does not move, there is no way the end consumer-facing industry can do well. The commodities will do well. And the last block, one we should definitely keep away, is the MNC block. Most satiated management teams who have no interest in any performance. You look at UBL. Now, you would wonder how can anybody produce such mediocre results in a country which is born and brought up on a Kingfisher beer? And you wonder as to the management team, what are they getting paid for the shareholder? So I think MNC as a block is a definite no-go. So play your stories, play your investment trust, play your commodities thing. Dividends are good. Go for good long-term stories. I think, and the new stories, structuring stories coming out, those have done well for it. Vanilla companies, I think, will have a major problem even continuing to June quarter. That's why I said, let's see what happens to autos, tractors, everything at the end of June quarter, and we'll take a call. There is no hurry to invest in any of those 70% of the companies in this country.
Yeah, absolutely not. So let's move out of the vanilla list, Ajay. Let's talk chocolate chip or mango or whatever is the flavor of the season. But tell me, where is it that you're hunting within mid and small caps? What have been your recent buys?
See, I think QSR has been a good buy. QSR stocks have done well for us and across the board. And those are, one, they're of course branded stocks to the extent. Plus, as India opens up and things we open up, I think, and offices open up, these stocks have done well for us. They should do well. So QSR as a range has done well. It's expensive, but you saw what happened. I don't have it, but Varun Beverages, etc., which are the summer stocks, I think, which are they have done reasonably well. So I think consumer, which is instantly consumed, restaurants, I think those are the areas which have definitely done well for us in what we have taken at the stake in. The number two theory that has seemingly worked, not so much again and again, is, as we discussed, the commodities, which has not worked too much on the share price, but worked very well on the dividend price. I think that's absolutely the fantastic story which is working on. Number three has worked out well is the soda ash. I think that's, as a commodity chemical, it was shunned, but I think it's done well for us at this point of time. So I think commodity chemicals are doing pretty well at this point of time. Fertilizer, again, if the government keeps giving subsidy the way it is doing, these companies are immensely profitable, because can you imagine you having a profit guaranteed margin by the GOI? What better thing you can have? Unfortunately, most of them are on PSU, so you run the PSU risk with them, but fertilizer has done well, and I think it will do reasonably well coming. And the last point, of course, you can't forget the sweet sugar. Never in the history I've seen a policy making has a bigger bonanza handed out to one sector, sugar. Partly it's re-rated. I think the best is still to come. So I think this is where we have spread our wings, and all pretty well, not the mainline sectors, but that's where I guess the money can be made perhaps. We will know it soon.
I'm sure you are. Given that you're hooking off for 2 months, I'm sure it's a happy portfolio which is making you smile. But, just talking about your conviction on sugar, Ajay. Now, this is a story which is well discovered. It's played out. And one knows that this is a long-term story. But having said that, in the short term, would you venture into add fresh positions? Or for someone who still missed the boat, can they still look to buy sugar at these prices?
Okay, first of all, you never miss a boat, because this is a beautiful market. It gives you chance to buy again and again. So even if you look at the best performing sugar stocks, they are 20-30% down to the highs. So, and as I keep saying, that if you are born and brought up and you come back today, you come in today into the investment market, forget the share price of the past. You couldn't have bought the share price of Vedanta at 60 rupees if you're not in the game of investment at that point of time. So you got to look at your position from today. Forget the past. Today tells you that among the sectors in India which are sure to do well is this one sector. And the reason we have holdings in quite a lot of companies. Ethanol, government has already declared a policy 20%. Export, they're very happy to do export. Cane prices, UP elections are over. So the pressure on increasing cane prices is almost gone at this point of time. Number fourth is, whenever they couldn't pay, the government paid them money to pay the cane areas. Tell me an industry which is like this. You just have to crush cane and mint money. And the last point, promoters have realized, let the investors enjoy some moolah and not take it home. Sugar industry was rampant for being loss-making and very rich promoters. That's got a little bit changed now. Now you got 3 or 4 sensible promoters who believe in invest capital market. So therefore, whereas it's a bonanza, I'm telling you, it's unbelievable what the government has given to the industry. And UP elections gone, you are assured that the cane price increase will not be anything dramatic for the next 5 years. I think it's a clear runway, at least a safer runway compared to rest of the market. Let's put it this way: if you're looking at options, this perhaps industry is the safest industry to invest in the commodity cycle. Same is true of, let's say a company like Vedanta, which we have a large holding, is that what is the competition? It has no competition. And imagine if Sterlite starts, imagine if they get the license to start the refinery. That's extra money on the table. It's been shut for 3 years. That profit will come straight on the bottom line. What better opportunity and safe investment than commodity players like these you can have?
Good morning, Ajay and Tara joining in. I just had one other question for you. You talked about Vedanta, but moving on to another conglomerate, the comeback of Reliance Industries. It was the stock of the year in 2020. The way the leadership is now changing, what do you make of that?
What I make of that, that is a true FOMO. That's a FOMO stock where most investors, even today, don't have that in their portfolio. And I think that risk, as I keep saying, you love it or hate it, but you can't leave it off the table. It comes to haunt you. I think it's a good story. One doesn't know how to value a holding company at this point of time, because once they get listed, what's the holding company discount going to be? It's got so many moving parts that how do you value the company? So this is one, I think, company. You just invest on faith in the promoter that he is going to keep giving you value more than trying to analyze it. Is it expensive at 2,800? Perhaps it is expensive at 2,800. But will we get it at 2,600? We may still get it at 2,600 or maybe 2,500. Now, what should you do? I think the only thing you can do is to keep adding up. If your price goes down, you add up. You can't ignore a core story out of India. People ignored the Adani Group company infrastructure, and they paid the heavy price by losing returns from the best performing set of companies. One may argue on the valuation why a total gas is what it is, but that's what it is. Life is all about that. So I think Reliance is one story. You cannot ignore it. That's one. Number two is, it's a dynamic story. They're doing new things every year. Not everything will make money, but the fact is they're doing new things. It's not static like a Bajaj Auto, which is sitting on its cash piles and doing nothing about it. I think that's it's an amazing actually comparison of what a company like Bajaj Auto does and what Reliance does. Reliance puts its cash to use. Bajaj Auto puts its cash in FDs. Now you can decide whether you want to be with the guy who puts it in FDs or you want a guy who puts new things on the table. Yes, he will take ambitious bets. Yes, there will be corrections. But I think this is one stock you need to buy on correction, not sell on a correction. So, don't analyze it. Nobody has been able to analyze the valuation. Truly speaking of this stock, what's a holding company discount going to be? I think just have faith and live with the faith and invest with faith.
Stock is how you're describing it, Ajay, and you always say create a FOMO basket, see how it performs when it goes down on the decline. What else is there these days in your FOMO basket besides RIL? Any of the Adani Group stocks?
Oh, yes, certainly. I sold out Adani Enterprises, and to my chagrin, I found that it's the worst investment decision I ever made. I couldn't find a logic to keep on holding. I made decent money, but I couldn't find the logic. But market, of course, found a new logic, and I think may have missed the bus on the coal, which will come out of Australia. Perhaps that's what's driving the stock. But the fact remains that, yes, sometimes you make these decisions, and sometimes, you take a good decision, bad decision. But in the life, as you say, if you can still afford a holiday, I think we've done well for our lives.
Stock, you would say I need to monitor, because either I'm going to be buying that stock if it falls more, or I'm now looking at selling that stock if it goes up by 10%, because everybody has some stocks in the portfolio where you have fair value targets in the mind. Fair value to buy and over value to sell.
Sorry, Nikunj, I lost your question.
No, my question is that while you are going to be on a holiday, I'm assuming that you would still be checking markets. Once an investor, always an investor. So what is that you would keep on your radar, where you would say that a 10% fall, even though I'm on a holiday, I'm going to be telling my office to buy that stock?
I think commodities. If there is a fall in commodities, I will go back and buy it again because I think it's a longer cycle. It will last for at least 7 to 10 years. Mostly a deleveraged nature of the stock, and it's both local and global that we're buying commodities. So if there is a big correction, commodities is definitely on first on my radar that we will definitely buy. Second is if there is a big correction on multiplex, it's a standing order, buy the shares because I think that's a unique monopoly. We will never see it again. And for a change, South has done wonders to this. It's unbelievable what's happened. Indian film industry has now gone to the wayside compared to the South. Now, who expected South to give the momentum? Now, so that's a big story coming up, and you got large stories, pictures coming up in the global market as well as Indian market in this year. It's a full pipeline. So you can't have a better industry than that in terms of multiplex. So I said commodities very clearly. We have very clearly that we will go into multiplex very clearly. If there's a large correction in QSRs, we will definitely buy it. And lastly, if there is a big correction in investment trust, we will definitely go buy more of that stock. So 4 clear categories of buying at this point of time. And the last bunch is if the sugar corrects more, I think I will definitely be the first person to get in. So 4 or 5 sectors, but they're all sticking to the same theme at the end of the day, which is monopoly, which is cash flow driven, and which have got a clear path for demand. I think that's a common theme across what we will intend to buy if there is a correction, Nikunj.
All right, Ajay, appreciate your time. Glad you could join
Thank
us.
you very much. You have a good day.